with about a month until the September FOMC meeting, Fed leaders are sending some mixed signals about the next plan of attack on the sticky inflation situation. While Fed Chair Powell struck a hawkish tone in a speech at Jackson Hole, saying that they are prepared to raise rates if needed, not every member seems to agree. Philadelphia Fed President Patrick Harker said in an interview with our very own Jennifer Schonberger, quote, "I think at this point, just let things work through the economy. I think we need to give it a little bit of time, but recognize that not raising rates right now will still mean that we are in a restrictive stance. We're still putting pressure on the economy."
Meanwhile, Cleveland Fed President Mester says, quote, under-tightening would be a worse mistake than over-tightening a little bit because we can course correct that. So what can we expect from this meeting in a few weeks? Well, joining us now is a reporter with his finger on the pulse and known by many as the Fed Whisperer. We have Nick Timiraos there, the Wall Street Journal chief economics correspondent. So what do we make of this mixed messaging that we're getting from the Fed?
Well, I think it's pretty natural that at this point in the cycle, you're just going to hear more uncertainty over how much higher to go. I think, the important message out of Jackson Hole over the weekend is that the question right now is really about whether they have one more increase here. It's not as if you hear a lot of support for multiple increases in the Fed funds rate from where we are. I think the other message out of Jackson Hole, but there was a mood in the room of uneasy optimism. And that is, if you look back at where they were a year ago, where inflation was much higher and the policy rate was lower, they're obviously feeling better about the fact that they've got the policy rate higher. Nothing terrible has gone wrong in the economy so far, and you have lower inflation. But I think it was uneasy because there are still concerns of the policy lags, the effects that could still be felt from what they've done, and the fact that it still might take some time to get inflation down. There's some concern that we really kind of plucked the low-hanging fruit off the vine here, and that what remains could be harder to get.
Is the Fed at all concerned about what some CEOs are looking at as a potentially vitriolic election season in 2024?
I don't think that's going to be something that really enters into the conversation. I think when you look at 2024, the question for the Fed right here is, it's really one of tactics. You mentioned, you ran the quote from Pat Harker, the Philly Fed president. And so he's laying out one approach, which would be to hold where they are right now and then stay there for longer. You're hearing other people who are maybe suggesting go up a little faster. And if you have to cut sooner than you think, then that's okay. And so I think those are the two tactics, the two different paths that are under debate right now is, do they really go with the higher for longer, which means maybe not going up anymore from here? If you're going to do a longer hold, you don't keep hiking. Or are you ready to consider cutting sooner because you think you may sort of kick off a sharper downturn if you keep going up? I think that's more of the strategic consideration that's being tossed around right now.